Welcome to the deep dive. For most of us, taxes. Well, they just bring up thoughts of April deadlines, don't they?
Right, the big rush.
Exactly. But what if taxation is actually this incredible sort of invisible hand, something that's subtly shaping almost every part of our society?
Mm.
Today, we're going to try and pull back the curtain on this topic. It's often misunderstood, but we want to uncover the fundamental what's and whys.
They're right into it.
Our mission in this deep dive is really to give you a shortcut. We're taking a fantastic, comprehensive guide to taxation and distilling the most important bits.
The key takeaways.
Yeah, exactly. We'll explore everything from its, surprisingly interesting history to its profound impact on our daily lives and even some intriguing ideas for the future.
Should be some aha moments, hopefully.
Let's hope so.
Yeah.
Okay, let's unpack this. At its very core, what is taxation? Oliver Wendell Holmes Jr. had that famous quote.
Oh, yeah. Taxes are what we pay for civilized society.
That's the one. And it really nails it. Yes, the main point is raising revenue, funding government operations. But it's also this really powerful tool,
Yeah,
subtly influencing our behavior, our choices.
absolutely.
Think about it. Maybe an income tax credit nudges you towards buying a fuel-efficient car.
Or the classic example, the tax on tobacco, designed specifically to discourage smoking.
Right. It's this dynamic lever that governments are using constantly.
And what's truly fascinating, I think, is how these taxes touch us. Sometimes it's so direct, you can't miss it, like your income tax withholding.
Yeah, you see it on your payslip.
Exactly. But other times it's so indirect, you might not even realize it's happening. Like, if you rent an apartment, the property taxes your landlord pays, they're definitely factored into your rent. So you're paying that tax just indirectly.
Huh. Never really thought about it that way.
Yeah, the key thing here is that ultimately all taxes trace back to individuals. Someone, somewhere, is paying.
Which makes sense why tax initiatives are always such a big deal in elections, right? Local, state, federal.
Precisely. These aren't just dry policy debates. They're really fundamental conversations about how we, as a society, decide to fund everything we share.
Absolutely. And, for a lot of professionals, especially if you're in accounting or finance, understanding all these different business taxes, it's not just academic.
Oh, definitely not.
It's absolutely critical for compliance, for strategic planning, even for just basic cash management. How you actually structure a business deal can really meaningfully change your tax bill.
The transaction itself matters hugely.
Right. So the goal isn't just like memorizing rules. It's about recognizing the implications, understanding the why behind them. Because tax law, it's always shifting, always reflecting the government's changing goals, economic, social, political. It's dynamic.
It would connect that to the bigger picture. Federal tax law isn't some static document set in stone.
Yeah.
It's genuinely shaped by, everyone involved in government. All three branches, the Treasury Department, the IRS, the courts.
It's a group effort, basically.
You can say that. And while raising revenue is the primary objective, sure, there are so many other considerations that come into play.
Like what?
Well, for instance, just the basic revenue needs.
Yeah.
Congress often tries to make new laws revenue neutral. Meaning, if they cut taxes somewhere, they try to raise them somewhere else so the government's overall income doesn't really change much. Or they use things like sunset provisions where a tax cut expires after a few years.
Oh, okay.
Then you have these really powerful economic considerations. The tax code essentially acts like a big set of incentives and disincentives for the economy.
How so?
Take depreciation rules. If businesses can write off investments faster, like with bonus depreciation, that encourages them to buy new equipment, potentially stimulating the economy.
Okay, makes sense.
Or, tax breaks might push us towards energy-efficient choices or encourage saving for retirement through things like 401ks. It's really about steering economic activity.
And here's where I think it gets really interesting. Beyond just the dollars and cents, our tax code says a lot about our society's values, these social considerations.
Absolutely. You see it everywhere.
Yeah, provisions that encourage things like employer-sponsored health plans or making charitable donations tax deductible.
Right. Or tax credits designed to help families with kids or support low-income workers through the Earned Income Tax Credit.
It's like the tax code is signaling what we as a society think is important. And on the flip side, the law often says, nope, you can't deduct that, like fines or penalties, things that go against public policy.
That's a key function, too.
And then there's this wrestling match with equity considerations, that slippery concept of fairness.
Always tough. Everyone wants fair, but what does it mean?
Exactly. A progressive tax system, for example, where higher earners pay a higher percentage, that's one idea of
Yeah.
fairness. The law also tries to prevent, say, being taxed multiple times on the same income, like with foreign tax credits.
And there's that interesting concept, wherewithal to pay.
Explain that one.
It basically means the law might let you delay paying tax if you genuinely don't have the cash available yet. Like if you swap one business property for a similar one, a like-kind exchange.
So you don't pay tax right away.
Right. It defers the tax until you actually sell the new property or otherwise realize the cash. It's not avoiding tax, just delaying it until you have the means, the wherewithal to pay.
Got it. And finally, well, you can't ignore political influence.
Definitely not. Tax laws made by politicians, after all.
So it's naturally shaped by political factors. You see legislation that clearly favors specific interests. The classic example is how rules for prepaid subscription income were pushed by groups like the AAA way back when.
Special interests play a role.
And then there's just political expediency. Sometimes measures are designed to sound good to voters, maybe targeting affluent taxpayers or using stealth taxes that quietly phase out benefits as your income goes up.
Right, like certain credits disappearing gradually.
So this raises a good question. How do the IRS and the courts actually fit into this whole messy picture?
Great question. The IRS influence is huge, both for enforcement and just basic administration. They make sure people pay as they go through things like withholding and estimated taxes.
The practical side.
Exactly. And their audit process is key for closing loopholes, making sure people are following the rules, ensuring compliance.
And the courts?
The court influence is also really significant. Courts interpret the tax law. They develop key concepts that help clarify how these often complex rules apply in real-world situations.
Like what kind of concepts?
Well, for instance, the arm's length concept. If two related companies do business, the court asks, would unrelated parties have structured this deal the same way? It ensures fairness in those transactions.
Ah, okay.
And that concept was largely developed through court decisions over time. It shows this dynamic interplay. Sometimes Congress takes those court decisions and writes them into the actual law, codifies them.
Okay, let's switch gears a bit and maybe I'll unpack some of the history here because, believe it or not, income taxes in America go way back.
Further back than most people think.
Yeah, like 1634, Massachusetts Bay Colony had some form of income tax. Wild. But the federal government's first try was much later, 1861, to help pay for the Civil War.
And that one didn't stick around.
Nope, it was temporary, later repealed. Then things got really interesting in 1994. They tried another federal income tax on individuals.
And the Supreme Court shot it down. Pollock v. Farmers Loan and Trust Co. said it was unconstitutional.
Exactly. But then came the real game changer. 1913, the ratification of the 16th Amendment.
That was the moment.
Huge moment. It finally gave Congress the clear constitutional power to levy both individual and corporate income taxes, basically overriding that Pollock decision and setting the stage for the whole system we have today.
And if we connect that to the bigger picture, that early system, post-1913, it started pretty small. Rates were low, exemptions were high.
Not many people paid it.
Right. Initially, it really only affected the wealthiest few. But the huge shift came after World War II.
Right then.
Well, the massive need for government revenue to finance the war effort fundamentally transformed the income tax. It became what we know today, a mass tax, affecting almost everyone.
Ah, that makes sense.
And that whole historical journey helps explain why our tax laws have become so incredibly complex over time. It's why most people now need help, either professional assistance or, sophisticated tax software, just to navigate it all.
Yeah, it's definitely not simple.
And it's a system that has to constantly adapt, right, to new ways of doing business, new ways of living. It's always evolving.
So given all that history and complexity, what does this all mean for trying to design a good tax system? What should we even aim for?
Well, it starts with the legal foundation, as you mentioned.
Yeah.
The Constitution giving Congress the power to tax.
Right. And the basic math seems simple enough. Your tax base times your tax rate equals your tax liability.
Pretty much. For income tax, the base is your taxable income. Rates can be flat or they can be progressive, meaning the rate goes up as income goes up.
Okay. But beyond the math, what makes a tax system good?
People have thought about this for centuries. Adam Smith, way back in The Wealth of Nations, laid out these classic principles or canons of taxation.
What were they?
Things like equity fairness, basically. Certainty, the rules should be clear and predictable. Convenience of payment, it should be easy for people to pay. And economy and collection, It shouldn't cost too much for the government to collect the tax or for taxpayers to comply.
Those still sound pretty relevant today.
Absolutely. They still guide a lot of discussions about tax policy and reform. Professional groups like the AICPA also have their own principles for good tax policy.
Now, what's fascinating here, I think, is just the sheer variety of taxes out there. Most of us think income tax, maybe sales tax.
But there's so much more, each designed to fund different things or achieve different goals.
Okay, break it down for us.
All right. First, you've got property taxes. These are usually local taxes, and they're ad valorem, meaning based on the value of the property.
And your house.
Yeah, exactly, your house, land. But sometimes also personal property, like cars or boats, depending on the state.
Okay, what else?
Then there are transaction taxes. Think federal excise taxes on specific things like gasoline, tobacco, air travel.
The sin taxes and others.
Right. And states often have their own excise taxes, too. Plus, most states have a general sales tax that applies more broadly to purchases, though some things, like groceries, might be exempt.
And what about buying stuff online from out of state?
Ah, that's where the use tax comes in. Almost every state with a sales tax has a corresponding use tax. It's technically owed when you buy something out of state for use in your state to prevent avoiding the sales tax, though compliance can be tricky.
I bet. Okay, what other big categories?
Wealth transfer taxes. At the federal level, you have the estate tax on assets transferred when someone dies, and the gift tax for large gifts made during life.
Are those a big deal for most people?
Honestly, no.
Okay.
Because of very generous credits and exemptions, we're talking millions of dollars, the vast majority of estates and gifts pass completely tax-free. They really only affect the very wealthiest.
Good to know. Keep going.
Okay, then the big one, income taxes. Federal, of course, with its progressive rates for individuals and now a flat rate for corporations. Most states have an income tax, too, often piggybacking on the federal system, and some cities even have local income taxes.
Like New York City.
Exactly. And then, crucially, employment taxes. These are huge. FICA taxes that Social Security and Medicare fund are main social safety nets. Both employees and employers pay in.
Right, you see that on your paycheck, too.
Yep. And there's also FUTO, the federal unemployment tax, paid only by employers, which helps fund state unemployment benefits.
Wow, okay. That's a lot of different taxes.
It really is. And we haven't even touched on things like customs duties or miscellaneous state franchise taxes and occupational fees.
So with all that complexity, what does this mean for the future? Tax reform is always being discussed, right? Are there new ideas floating around?
Oh, definitely. Discussions around tax reform often bring up some really innovative and sometimes controversial proposals. Well, there's persistent talk about moving towards consumption taxes. One idea is a national sales tax, often called the fair tax.
How would that work?
The idea is it would replace federal income taxes, payroll taxes, estate and gift taxes with one single broad tax on most purchases, maybe around 23% or so.
Any others?
Another consumption tax model is the value-added tax, or VAT, which is common in many other countries. It's collected bit by bit at each stage of production.
What are the concerns with those?
The big one is regressivity. Critics worry that consumption taxes hit lower-income people harder as a percentage of their income because they spend a larger portion of what they earn on basic goods.
Makes sense. Any other big proposals?
Yeah, there's the perennial idea of a flat tax, one single income tax rate for everyone above a certain exemption level, aimed at simplification.
Okay.
More recently, there's a lot of focus on using taxes for environmental goals. A carbon tax, for example, would tax fossil fuels to try and reduce emissions. And there's even talk of things like a small financial transaction tax on trades of stocks and bonds, though critics worry about the impact on markets. And get this, with commercial spaceflight taking off.
Don't tell me.
Yep, a spaceflight excise tax has actually been proposed. The idea is to address the environmental impact, the emissions, from rocket launches.
A space tax. Okay, that really shows how taxes have to keep up with, well, everything.
It really does. Always evolving.
Okay, let's shift to the practical side again. Let's unpack how the IRS actually operates day to day. We know they're part of the Treasury Department, responsible for administering and enforcing tax laws. But how do they decide who gets audited? Is it just random?
Not entirely random, no.
Yeah.
The audit process uses several methods for selecting returns.
Such as?
Well, a big one is information matching.
Yeah.
The IRS gets copies of your W-2s, your 1099s from banks, brokers, etc., and they compare that information to what you reported on your return. Discrepancies can trigger a closer look.
Okay, that makes sense. What else?
Certain groups might just statistically face more audits. People with very high incomes, for example. or self-employed individuals claiming significant business expenses.
Hmm.
Also, if you've had issues in prior years or claim deductions way above the average for your income level.
So unusual items can flag a return.
Exactly. Even large refund claims can sometimes attract attention. And occasionally, audits result from tips from informants or even things reported in the news.
Huh. Okay, so if you are selected, what happens? What are the types of audits?
It varies.
Yeah.
For relatively minor issues, it might just be a correspondence audit, handled entirely by mail.
Sending letters back and forth.
Pretty much. If it's a bit more involved but still limited in scope, it might be an office audit where you go to an IRS office.
Okay.
And then for more complex or numerous issues, especially with businesses, they might conduct a field audit where the IRS agent actually comes to your place of business or your accountant's office.
That sounds more intense.
It can be more comprehensive, yes. At the end, the agent issues a revenue agent's report, or RAR, summarizing their findings.
And what if you disagree with the findings?
You have options. There are settlement procedures within the IRS. You can appeal to higher levels. And if you still can't reach an agreement, you generally have the right to take your case to court, tax court, federal district court, or the Court of Federal Claims.
Okay, so there's a process. Now, this raises an important question. Are there time limits on all this? How long does the IRS have to come after you? Or how long do you have to claim a refund?
Absolutely. There are crucial time limits. They're called statutes of limitations. Generally speaking, the IRS has 3 years from the date you file your return to assess any additional tax they think you owe.
Or got 3 years.
Usually.
Yeah.
But there's a big exception. If you significantly understate your gross income by more than 25%, that extends the assessment period to 6 years.
Ah, okay. Good to know.
And if you don't file a return at all, or if you file a fraudulent return, there's no time limit. The IRS can come after you indefinitely.
Wow. Okay. And for taxpayers, if we think we overpaid.
For claiming a refund, you generally have 3 years from the date you filed a return, or 2 years from the date you actually paid the tax, whichever is later. So you need to act within those time frames.
Right. Now, what happens if you don't comply? What are the consequences beyond just owing the tax?
Well, noncompliance can definitely bring interest and penalties. Interest generally accrues on any unpaid tax from the due date. And then there are penalties.
Like what kind of penalties?
There are penalties for failing to file on time, penalties for failing to pay on time. If the underpayment is due to negligence or disregard of the rules, even without intending to defraud, there can be a substantial accuracy-related penalty, often 20% of the underpayment.
Ouch.
And if it's actual fraud, the penalties get much steeper. A civil fraud penalty can be 75% of the underpayment related to fraud. And in really serious cases, it can even lead to criminal fraud charges, which carry hefty fines and potential prison sentences.
So the consequences can be quite severe.
They absolutely can be. The system relies on voluntary compliance, but it has teeth to enforce the rules. Oh, and one small point on interest. If you are due a refund, the IRS generally doesn't have to pay you interest if they issue it within 45 days of the filing due date or when you actually filed.
Good to know. Finally, what about the folks who prepare taxes for others? Are there specific ethical rules for them?
Yes, absolutely. Tax professionals operate under strict ethical guidelines. The main one at the federal level is Treasury Department Circular 230. It sets the rules and standards for practicing before the IRS, things like due diligence, competency, and avoiding conflicts of interest. Violations can lead to censure, suspension, or even disbarment from practicing before the IRS.
So they're held to a high standard.
Very high. And professional organizations like the AICPA for CPAs have their own statements on standards for tax services, or SSTS. These require preparers to have a good faith belief that a tax position has a realistic possibility of being sustained if challenged. They also cover things like advising clients on errors, using estimates appropriately, and maintaining confidentiality.
Makes sense. Integrity is key.
It has to be. And there are also specific penalties that can be imposed directly on tax preparers for a certain misconduct, like understating a client's liability due to an unreasonable position or willfully attempting to understate tax.
So the whole system has checks and balances, not just on taxpayers, but on preparers too.
Exactly. It's all designed to maintain the integrity of the tax system.
Wow, what an incredible journey we've taken through the world of taxation. It's really clear taxes are so much more than just a payment, aren't they?
Definitely. They're this powerful force shaping society.
Yeah, a tool for social engineering, economic regulation, and really the absolute foundation of how government operates. We've traced the history, looked at the forces shaping tax laws. categorized all those different types.
And even peeked into the future with those proposed taxes.
Right. We really hope this deep dive has given you, our listener, a fresh perspective, maybe some genuine aha moments about this topic that, let's face it, affects every single one of us.
Hopefully demystified it a bit.
Yeah. And as you think about our discussion, especially those proposed future taxes, the spaceflight excise tax, the carbon tax, here's a final thought to mull over. What unexpected role might taxation play in your future? How do you think these evolving tax laws will reflect, or maybe even actively shape, our society's values and economic priorities in the years ahead?
It's a fascinating question to consider.
It really is. Keep asking those questions and definitely keep being curious.